Welcome back, everyone. Today, we're diving into a super fascinating topic, emerging trends in fintech and how it's reshaping banking. It's absolutely mind-blowing how this sector is transforming the banking landscape. We're talking about innovation, changing consumer expectations, and banks adopting fintech strategies to enhance efficiency and provide extraordinary customer experience.
Wait, hold on a second. So, what exactly do you mean by fintech? Is that fancy tech for finance?
Haha, great question. Fintech, which stands for financial technology, encompasses any technology that enhances or automates financial services and processes. Picture neobanks, these fully digital banks that have no physical branches whatsoever. They provide super user-friendly interfaces with lower fees. It's like being able to sip your coffee at home while managing your entire banking needs online.
So I guess that's like having a coffee shop that only serves lattes online? I mean, it's definitely convenient, but can you really trust them with your money if you can't physically go see them?
Absolutely, that's a fantastic analogy. Trust is a crucial factor here. Many neobanks are built with robust security features and often have more transparent fees. Plus, they're available 24/7 since they're always online. Imagine being at a random coffee shop and needing banking help at 2 a.m. Traditional banks might leave you in the dust, but these digital platforms are always there for you.
Wow, okay, I get that. So, speaking of technology, I've heard a lot about ACI in different industries. How is that affecting banking?
Oh man, AI and machine learning are absolute game changers. Think of fraud detection. Banks use AI to analyze transaction patterns in real time, like a digital watchdog scanning for suspicious activity. If something looks off, like a sudden purchase in another country, it triggers protective measures instantly.
Oh, wow. That's like having a personal bodyguard for your money. But, what if I'm spending a lot on vintage action figures or something? Wouldn't that raise some red flags and freeze my account?
Haha, that's the cool part about personalized banking. ASI doesn't only detect fraud, it learns your spending habits. It tailors financial advice based on your transactions. If you regularly buy vintage action figures, for example, it'll recognize that, and instead of freezing your account, it might suggest a savings plan to help you expand your collection.
Oh, wow, that's really, cool. So I guess it's all about having that balance, right? Speaking of balance, what's this whole open banking thing?
Great segue. Open banking is the new frontier where banks share data using APIs with third-party developers. It's like a delicious buffet where different finance apps, budgeting tools, investment platforms are all possible because banks open up their data. This competitive environment drives innovation, which ultimately benefits us as the customers.
Wait a minute. Can you explain that more? I mean, we're talking about sharing sensitive information, right? How can we trust them not to, misuse that?
Definitely. That's a key concern. Trust and security must be at the forefront. There are regulations to protect customer data in open banking. Think of it like a potluck dinner. Everyone brings their dish, but there are rules on how to share safely so no one ends up with food poisoning.
Haha, love that analogy. So moving forward, I've been hearing a lot of buzz about blockchain. Is that just for cryptocurrencies?
Not at all. While cryptocurrencies are a significant application, blockchain tech has numerous uses in banking. It can streamline processes using smart contracts, automated contracts that enforce agreements between parties. Think about it like having an automatic vending machine for loans. Once conditions are met, voila! Money is dispensed without manual processes.
Whoa, that's like a magic machine. But, speaking of magic, how will digital currencies and CBDCs play a role in changing the traditional banking landscape?
That's the million-dollar question. Central banks are exploring CBDCs, central bank digital currencies, digital forms of traditional money. Imagine carrying a digital dollar. It's poised to modernize finance and make transactions even more efficient. But it also raises the question, What happens to traditional banks? Will they lose business?
So it's kind of like an epic showdown, like superheroes battling it out for supremacy? But what about sustainability and ethical banking? Are banks really focusing on that?
Absolutely. Sustainability and ethical banking are soaring in importance. We're seeing a rise in green finance initiatives that fund eco-friendly projects, much like choosing solar power over fossil fuels. Moreover, fintech solutions are tackling social issues like financial literacy, giving back to communities, and championing social responsibility.
Wow, that's like, superhero finance. But like, where do you see banks fitting into this landscape of rapidly changing trends? Are they at risk, or will they adapt?
It's a mix, honestly. The fintech revolution is reshaping banking as we know it. Banks face challenges, but with the right strategies, adopting new technologies, collaborating with fintechs, and prioritizing the customer, they can enhance their competitiveness. It's about embracing these trends for growth. Staying ahead is essential.
Wow, that's thrilling and a bit scary. Can't wait to see how all of this unfolds. Thanks for breaking this all down.